Monday, July 7th, market analysis, Stan Ehrlich, 10 o'clock California time. Good morning. We have some brand new signals in the YM, a sell signal, and also in Apple, which we'll get to toward the end. So let's start out with the E-mini. I always start out with the stock indexes, go to futures and some stocks, including Apple and NVIDIA. So we have the overbought condition, and finally I am seeing some evidence that we're starting to pull back, which is what I was expecting a week ago when you started to get overbought around the November through February tops, major resistance area. We did manage to get above it. It did stay above it. Normally that's a very bullish type of a breakout, but the market just didn't have the zip pop bang it usually would have on a significant bullish breakout. So we are now looking at a low lower than the last two trading days. For futures, that would be Thursday and Friday, but some markets were closed completely on Friday. Some markets closed early on Friday. Some markets weren't open at all on July 4th, Friday. So we've got some minor new lows. Now, they were made a little while ago, approximately an hour or so ago, maybe. And then there was a rally, which didn't go anywhere. And now we're back down very close to the low of the day. I think we're going to make new lows. We're down a fairly significant amount, 5.5 points or so. We were down about 6. I would not be surprised if we're down another 2-3 points more by the end of the day with lower lows. We'll see what happens. The next chart is the 1-minute chart on the E-mini. And as you can see, it made a low, rallied back up to previous little resistance. Now I'm starting to talk about resistance because some price action is now above where we are. And if that resistance continues to stop rallies in a general sense, then you're probably going to see new lows. And I think that's exactly what's about to happen. Spider did close the gap from Thursday to Wednesday to Thursday. It was not open, SPY, on Friday. So we had a gap. And as I said on Thursday, I think that could have been an exhaustion upside gap. So far, it looks quite plausible. I was kind of hoping for it to end up being an island top, but that did not happen. So now I'm looking for a test of lows and new lows and get below the lows of last week. Test support, maybe bounce off of it a little bit. And that starts around 613.5. Then dropping down below 613.5, below 609 and a third. And there is an old gap. I'll put a little marker on that from about 2 weeks or so ago on the SPY. That gap, I think, is going to get closed at 600.50-ish and maybe even lower. If we don't hold at this rather substantial historical support level, again, around 611, 9, 12, 13, then we got some problems if that doesn't hold. Next is the Spider 1 minute. As you can see, rolling over. What? No, I'm not current. I thought that looked weird. Just a moment. And here we are. So gap is closed. Rally stopped at resistance. I think it's about to make new lows. Of course, same story for the QQQ. Overbought again on Thursday. And a divergence top. Minor, small one, but it's there. Now, you've got to hold, if this is going to continue to be bullish, around 540, the beginning of major support, the old highs, again, December through middle of February. And that ballpark area where I've got some rectangles to show you the support areas. And there's a gap to close also in the QQQs like the SPY. And the 1 minute chart starting to slip off. Now, there's no bearish engulfing in the NASDAQ futures, and it was open on 4th of July. in my humble opinion, after 53 years of doing this, I think that the markets will probably be open 24/7 in the years, maybe a decade or two to come. They won't stop ever. The globe is getting smaller, so to speak. Um, that's the trend. So these markets that are closed at the moment, the rules will change sooner or later. NASDAQ overbought, starting to slip, minor new lows, looking for more weakness. The support level I'm talking about, the highs back at the end of last year and the beginning of this year in a general sense, is very close. In fact, we're dipping down into it at today's lows right away. So the lower it slips, the more it chews into that support and starts to probably drop off even faster. Next, here's the 1-minute chart on that NASDAQ. Looking a little heavy. The YM does have a bearish engulfing ER sell signal today. The last green buy signal was on April 9th. It worked out very, very nicely. This does change me to flat out bearish on the Dow. It is an outside down day in overbought conditions, and that is the combination on my custom RSI and custom candlesticks that I like. So the last sell signal was the top of the market exactly on January 31st of 25. Huge crash after that. Took a couple of months. This could be the same thing. I can't say anything different. When I see a red bearish engulfing ER sell signal, I am turning bearish. The fail-safe stop to begin with is above the high of the day, and I'll show that to you right away. Here we go. Look at this. I don't have this opportunity very often to show you in progress the ER1 scalp trade. When we got below the previous trading day's lows, it was 8:22 California time. The system automatically went short, automatically placed a predictive stop, and as the clock ticks and prices move in our favor, which it did, our trailing stop, which is the yellow dotted line, comes down dramatically. Now, when we start making new lows and or get closer and closer to the close, this trailing stop, which is sideways for the moment, ever since about 9:24, so it's been a little over half an hour, 40 minutes, but it'll start coming down again. It's already locking in a profit, not very much of one, but if I were to get out right away, I would have this profit from where the trade line begins, where I'm short, and the current tick. And this is dynamic, so the trade line goes up and down with the current quotes, as you can see. Looking good. Looking for new lows. This should be a really, really good trade. So far, I'm basically guaranteed, although I don't like using that word, for a small profit at the moment. It's just going to get better, supposedly. Russell. Major historical resistance seems to have stopped the rally, although we did get above it a little bit and close slightly above it. Here we are dropping back into the middle. I think we're going to get below. I think we're going to come down in the Russell to 21.26 and maybe even lower. This could be the beginning of the break. I like to see a little more evidence. It's only a few hours old. More weakness is what I need. And or sideways and then new lows again. The bond market. Sharply lower, making new lows. Trend line has been broken late last week. Follow through to the downside. Not oversold or overbought, so it has more downside possibility. Now, there's a chance that if it dropped off fairly quickly for a day or two, that it could build some sort of bottom starting in early April. You know, maybe a shoulder here, the head, and another shoulder over here. It's already a little lopsided timing-wise, not too badly. So if this week it drops off and starts to come back up again, I'll draw in the neckline, which I could do right now, off that high, and certainly off that high. Leave it at that for the moment. What about the notes? 10-year notes, minor new lows. Support is not holding now. It did late last week. And now we're starting to make new lows also on the 10-year notes. It's 2 years, sorry. And more weakness, looking for more weakness. Too bad I didn't get a bearish engulfing. We came very, very close on July 1st. Almost an outside trading range day. That would have turned it red. And that's exactly what we got on April 7th in a big, big way. And it worked great for over a week. Big move down. Volatility is not too bad lately, but it might be starting to creep back into the notes and bonds. Now we have an outside up day, but we're not oversold in crude oil. Therefore, you're not getting a buy signal, which would be green, like that one that worked great, like that one that worked pretty good, like that one that's the bottom of the market for months since and before. Whopping important turning point in the crude, April 9th. Big green bullish engulfing ER buy signal. So this bearish one may very well push this market in the weeks to come way down to 54, 52, and I don't know, maybe even lower. That's pretty darn bearish looking. But this outside up day means it's supposed to rally a little bit. Okay, fine. Maybe up to 70, 71, even 72. That's probably the most I could put up with, so to speak. But I don't think that's going to offset the effects of the June 23rd bearish engulfing. So I do expect a little bit of strength here for a day or two, but no major rally. And I do think shortly after that, we're going to see new lows below 64. Next, outside up day also in natural gas. No bullish engulfing, not oversold. I'm expecting a short-term rally. If I remember, in the last few days, we've made new lows since January. The longer-term trend is obviously down, and we do have this complex head and shoulder top formation, which I've detailed with my arch marks, and the timing was only like 1 day early or late, I forgot. The timing was almost perfect for the last shoulder high, which is a bearish engulfing. Beautiful. We had a bearish engulfing on the first shoulder high also. Beautiful. This pattern has really got a bunch of features to it that is great, and we have made another new low today. Now, granted, at the moment, we have an outside up day, and granted, that means you're going to rally a little, probably. The key here is don't get above 3.7, and especially don't stay above the neckline, which is this line here. That's your neckline. So that's the only rule at the moment. I could rally as much as up to 3.7. Probably not going to get that far, and then turn into new low ground and test the support area, break it, and keep going down. This pattern says we're supposed to get down to 1.000. Very bearish eventually. But because of the reversal at the moment, okay, small bounce. How about heating oil? No, nothing. My new high. Currently trading slightly lower on the day momentarily. Not much to say, except I don't think the rally's going to go anywhere, if at all. And I am expecting, like the other energies, new lows in a week or two, 3, this month. Gold, silver, platinum, copper. So we have a little bit of a dip in gold, and then it recovered to slightly lower on the day, approximately unchanged at the moment, very close. Not overbought or oversold. And we are, like I've been saying for a few weeks now, between a rock and a hard spot. Support held June 30th. A little bit of a bounce right in the middle of the range of resistance above at 34.75-ish, and support below at about 32.35-ish. Silver has an outside down day. The implication is it's going to go down some more, test the support at approximately 35.5. I think that's going to get broken. We were quite overbought with a divergence top, middle of June to the end of June. Well, mostly the middle of June. And that now, this price action says no more strength. We got up close, topped out, bearish engulfing, probably going to make a test of support and then drop off, I'm thinking, to about 33.6. What about platinum? We also have a bearish engulfing in platinum at this point. Remember, you've got to stay lower than the previous day's close to have the bearish engulfing stay a bearish engulfing. Otherwise, it would be a bullish engulfing if it closed higher, which it doesn't look like it's going to do. And an unchanged close would be extremely unusual, very rare. It happens, and it kind of negates the outside trading range completely. It doesn't mean much at that point. But again, maybe 1 out of 200 key reversals or outside trading range days is closing unchanged. Very rare. Copper, a little bit more of a dip, test support. I think it's going to slip off even more. I would easily expect 4.7-ish and maybe down to 4.5. What about grain? Soybeans are dropping off a lot. I still have high hopes that this bullish engulfing on June 27th, which is the low so far for the move down and the lowest low for a couple of months plus, is going to stay the low. But I don't like this amount of break. This is a little larger than I expected. Now, we did leave a little gap behind. So rallying back up to close the gap from the low of Thursday. Friday, this was not open, Chicago Board of Trade. So there's no data for Friday. So Friday, Saturday, and Sunday left a gap behind. That's good. If we hold, I think it's good. Then we're going to go back up and close the gap and keep going up. I would love to have this broad head and shoulder bottom work, but we need to close above 1076. Call it 1077. Then we've got a shot at the neckline, and then we've got a very big upside potential, 1230 something. But we got to have a breakout first. Soybean oil did break out with a gap, classic across the board, came up substantially on Thursday. Oil got overbought with a tiny little gap, I think, that's now closed. So let's not go much lower. Let's stay above the neckline, which is the dotted yellow line right here. And let's see it make new highs for the trend. The minimum upside objective is 62 3/4, which is in effect because we had the breakout, no problem. Minor sell signal, did very well for a couple of days, but the neckline held, and that was a little below the low of June 26th. Then we almost made new highs for the move up, got overbought, backing up for one day. Today, so far, let's see if we can hold and make new highs and keep going up to 62 plus. We have a bullish engulfing on July 2nd, Thursday last week, and a couple days earlier that didn't work. But this is still the low of the move in soybean meal, July 2nd. The break today bothers me because it looks like it's going to be a new low close. But the fail-safe here, of course, if you didn't move your stop up already, which you should have done, past tense, 2020 hindsight, to lock in a profit because you had plenty of opportunity. Wouldn't be very much, but, green's better than red. So I'm thinking it's going to hold, turn around and make new highs soon. Crossing my fingers on this one. It's a little bit weaker than I would have expected. And what about corn? Same kind of story. No reversal, no major bottom. I'm looking for a possible very broad, wide double bottom from August of last year to July of this year, almost a full year. But we've got to stop dribbling back down here. We've got to turn around and start to make new highs real soon. And that would be above last week's highs. So we'll see if this holds or not. Same thing goes for wheat. Dropping off a little more than I would care. But it didn't damage. It didn't break support. It's not making any lower lows. It could easily hold and turn right back up. Okay, we're now looking at Shell. Gap down big time. So I will put a gap marker in here. And that would be from yesterday, not yesterday, but the last trading day, Thursday of last week. This is a stock that didn't trade on Friday. So I've got July 3rd is the last trading day of last week. And then today, 3 days later, closed Friday, Saturday, and Sunday. Dropped off testing a little support. You know something? It's coming down. Yeah, that's about it. To a little support. I don't think it's going to hold. The next one is Apple. You know the old saying, the way Apple goes, the market goes. This is a bearish engulfing ER sell signal in Apple today, in progress right now. All it has to do is stay below the closing price of Thursday. It wasn't open on Friday. And we will have a sell signal on the close completed. There's a slim chance it could, turn around and go above unchanged, which would completely erase the red, and it wouldn't be a signal. As long as we stay below Friday's close, we've got a bearish engulfing ER sell signal. And now I'm looking for a move down to at least test this trend line, a little under 200, probably down to about 195. And if 193.60 does not hold, then I could be looking at 170. Next, we already broke some support in Tesla, and it left a big gap behind today from Thursday's low, closed on Friday. So closing these gaps in Apple, well, not in Apple, but it would be Shell and Tesla, would not be a big surprise, but making new lows for about a month now and jeopardizing the previous buy signal and testing support. Looks like it's going to break support. Looks like it's going to drop off. There might be a rally first to go up and close the gap. Gaps are almost always closed. Not all of them, but 90+%. Now we've got NVIDIA dropping off a little today. Nothing particularly dramatic. Got overbought last week, and a couple of gaps below the market. I would be looking for 140, 480 without too much of a problem. We're 168 at the moment, so that's $40 down, a decent amount on a $168 stock. Back to E-mini. Looks like it bounced a little bit. Yep. No lower low yet, but this doesn't change anything. You guys have a great trading day and profitable trading to you.